Welcome to the Dream Huge podcast, where we'll talk with real estate investors, entrepreneurs, business leaders, athletes, and more to inspire you with their success stories so you can work hard, never give up, and dream huge. And now, let's start the show.
Yo, what is up, everybody? Welcome to the Dream Huge podcast, man. Super excited today to talk some real estate, man. We love sharing success stories with other huge dreamers, folks in the real estate business, entrepreneurs, movers, shakers, influencers, and more. And hopefully these stories will help to motivate and inspire you to also wear a DH hoodie or a sold hoodie.
Hoodies all around.
Will inspire you to also dream huge. So today we have our very special co-host, JP for 3, John Pavlansky. What is up, my man?
My man, Pete, what is happening, brother? I am doing absolutely terrific today. I'm excited to talk some real estate. I'm excited to dive into some niches of real estate. Pete just reminded me again what they say about the niches. What do they say about the niches, Pete?
Well, I'm trying to figure out, is it niches or niches?
Niches or niches?
I don't know. Which is correct?
Well, for the sake of the quote, we'll say niches because the riches are in the niches, baby.
It rhymes with riches. Okay. The riches are in the niches. And we know, being on this podcast and talking with all different folks, all different types of real estate folks, that you can do so many things with real estate. And our man, Sean O'Dowd, is a general partner at Scholastic Capital. And he's going to tell us what he does and what his niche is in the real estate business. So what is it that you do, Sean?
Yeah, so we're a real estate fund. We buy single family homes in really high-end school districts, and then we rent them to families who want to be in that school district.
Fantastic. It's just a simple,
short and simple
formula. Shut it down. That's the end of the podcast. So that was really good. No, but we want to dive into that. So
let's do it.
What areas specifically? I mean, you say good school districts, but are you targeting certain states, certain regions? What does that look like?
Yeah, for sure. So there's kind of like 2 different cuts to it. One is like what region, and then what towns within those regions. So we are exclusively buying in the upper Midwest. So Minnesota, Wisconsin, Illinois, Indiana, Michigan is our sweet spots. And then within those towns, within those states, we're really looking for a supply-demand balance. So demand side, really good school district is our demand driver. There's a couple of different ways that we define that. And then on the supply side, we're looking for areas that don't have rentals. And that puts us basically at that intersection of that of, hey, a lot of demand to be in this area, no rental supply. We're in a very advantageous position to rent the properties out. We get a lot of people every time we put a home on the market because we're the only game in town. And there's a lot of people who want to be in those areas. It's a pretty small list. All in, we've got a list of 37 zip codes across 5 states that we like and invest in.
It's a fantastic niche, because, again, you're helping people. It all boils down to just helping folks, and in the better school districts, typically there are less rentals, period.
Exactly.
Because they want to promote home ownership, and local ordinances actually discourage, multifamily investors or just landlords, period. So that could be, look, guys, you need rentals everywhere, even in the good school districts. So I'm glad that you're able to help folks out with that, and that fills that niche. What do you think about that, JP?
Yeah, no, I'm already sitting over here. I don't know if you noticed, but I'm already like writing down questions that I have about it already. So, I mean, the very first thing, we do have a real estate brokerage. In terms of finding the 30 plus zip codes you said you guys have already, are you working actively with real estate agents in each of those zip codes? Are you talking with real estate professionals on, hey, where are some areas that we should focus on? How did you kind of get down to the narrow amount of the zip codes you have, and how are you acquiring properties currently?
Yeah, so for the zip code selection is about a 1.5-year process to go from all those 5 states to just the 37. And a lot of it was data, and then a lot of it was also perception. And agents came in on the perception piece, or they were one of the factors in the perception piece. So data, like with really high-end school districts, we have to use grade schools, for example, because that's what's integrated on Zillow. So it has to be good. But the best data set we have shows what % of high school graduates go to an Ivy League school. And there's a magic percentage in that, where if it's above that percentage, like there's extra demand for that school district. And then there's perception elements to it. to it. Like, hey, like, there's a lot of actually good school districts in the data that people don't think are good, which is kind of an interesting phenomenon. But those aren't great neighborhoods for us. We need places that actually are good and people think are good, because then they want to move into those areas. And then on the supply side of things, we're looking for areas that have owner occupancy rates 85, 90% or higher. National average is about 60%. We're looking for areas that don't have buildable land left, so you can't come in and build a build for rent community in there, and it's going to upset our supply demand balance. And we're looking for areas that traditionally haven't allowed multifamily redevelopment. They don't want you they don't let you knock down a house and build an apartment building.
How are you buying these homes? Off market, on market?
Almost exclusively on market. We're starting to do a couple off market things, but almost exclusively on market.
Beautiful.
And how does that look? You have relationships with, like JP said, local real estate agents, or?
Yes and no. So we've built custom software that allows us to look at all the homes in the market and kind of move them through our underwriting funnel pretty quickly. So once a home is on the market, about 1.5% of the homes on the market kind of make it through that funnel. We can call and put an offer in right there. We tend to be able to move pretty quickly. I'm technically licensed, so I represent the fund, so the listing agent can dual end the transaction, which they love. And then the other element that works in our favor is because it's only 37 zip codes and real estate is such an 80-20 game, that means there's a list of, call it roughly 100 agents total that will control like 90% of the volume in these areas. So after we've bought a couple homes from the same agent, they start to get to know us. They start to get to know what we're looking for, what we're buying, and then they go from signed listing appointment to giving us a phone call on the drive back to the office saying like, hey, I got something. I think it's a good fit for you. Like, are you interested? Let me send you the details.
So to dive into that a little bit. So talk about, okay, you're a savvy buyer, investor, buyer. So you would rather go directly to the listing agent because, like you said, the listing agent can double up on that. So that increases your chances of getting the deal, right?
That's right. I mean, or go for it.
And you don't mind going unrepresented because you are an experienced buyer.
Exactly. I mean, our offer acceptance rate right now is 55.1%. We're traditionally winning offers 7% below appraised value, 7.3% below appraised value. Like, both of those stats would not be true without us being able to go directly to the listing agent.
Fantastic.
I'm amazed, man. I love it. And that's the beauty of this podcast at times, is we do get into some of these niches and niches, whatever you want to call it. And it's super unique. And I'm sitting here thinking, we invest in the rental properties as well. And some of my favorite rentals that I have right now are single family houses in great areas, but they were both purchased off market. They were deals that I found myself. And then I'm looking at some of those deals in that same neighborhood that are on market, and I'm saying the numbers won't work there. So the biggest question with this is, it's a beautiful scheme of, we're finding areas that we're going to have great tenants and great schools and great neighborhoods. The turnover is going to be low because they want to stay, especially if their kids are in that school. We're buying properties on market, and it's just single family houses, right? No multis, just singles, great areas on market. From any other investor in the world, they're going to look at you guys and say, how in the hell are you guys cash flowing? So tell me, how are you guys still profiting and cash flowing from this while providing a great offer and a great service to your tenants as well?
Yeah, the key parts of this goes back to the zip codes and the zip code selection to it. I mean, so Invitation Homes is the largest owner of single family homes out there. They own about 80,000 plus. They've been pretty public that they report it typically every quarter. Sometimes they only do it annually, but their tenants typically make somewhere between $100,000 and $117,000 a year. Like, that's their range. Our tenants make $230,000. It's a very different kind of class of income that we're working at, and what that typically means is our rental prices are double than the town over. It's back to it, like, it's a really high end, in demand area. People really want to be there. And because there's no rental supply, we're the only house available. So if you want to move into this good school district, like, we've got the only house that's available, and we can also do a better job of maintaining it because we've got scale and volume compared to like Joe and Sally, individual one-off home investor. It allows us to charge like a higher price for a premium product make sure it's maintained as a premium product, and give families access to those really good school districts.
Beautiful.
But all of that ends. That's why we can get yield out of the homes.
I love it. I love it. This is just amazing stuff. Pete's got something. I can tell. I can see it on his face.
What is the buy-in, and what are you offering to investors?
So for us, our minimum is $250, and investors are buying into our fund model. So they own a piece of everything that we own and will own. They get three things. They get the distributions that come out from the cash flow of operations. Number two, they get the depreciation that comes out of it. So for most investors, everyone's tax situation is different, but for most investors, it means their distributions are tax-free. And then the last piece to it is their equity value is still maintained at fund NAV. And we're building this portfolio for sale to a larger single family institution down the line. And our hope writing is that this is going to be a pretty significant equity boost as we assemble a big enough portfolio that's interesting for some of the larger guys.
How big is the portfolio currently?
Right now, so we only buy homes during the summer because that's when our tenant base is moving. We bought 11 million last year. We're probably going to buy about another 20 to 30 this year. And then year after that, probably somewhere in the neighborhood of 60 to 80.
That's an amazing model. Amazing model. So you guys are raising capital, raising funds throughout the entire year, essentially. And then from, say, June to August or May to August.
It's crazy time.
You guys are going crazy. Yes. That's your April and March of the CPA world right there. Where you're
yes, exactly.
Trying to get as many deals as possible. I love it, man. This is just, again, so unique. Now, let me ask again, another question that we have on it is, and then I think we'll maybe, me and Peter are intrigued. As you can see, our minds are working already. You know, we're investors as well. So what are you guys doing currently right now to manage these? Do you have management companies in each area? Or do you guys have in-house management? How are you currently managing and taking care of the properties?
Yep. So we've got a third-party property manager. They are across all the states that we're in. So it's one partner. We do what we call like tenant operations, meaning like tenant calls, they're the ones who pick up the phone. Someone says, I want to see the house on Zillow. They're the ones who call them back in 10 minutes or get a email from us. And then we sit at what we call like more of an asset management level, overseeing what they're specifically doing and really at its core, maintaining the data across everything that's going on in the portfolio.
Easy enough, man. These guys have done it. Where are you guys located? I know you may have said this as well. Where's the company located?
Yeah, so I'm in the Chicago suburbs, and then we're a fully remote team. So we've got people kind of spread out all over the place.
That is.
All right, Sean, take us all the way back. How did you get into this?
Yeah, so I was actually born in the Chicago suburbs. I moved 22 times before I went to college. So we moved like basically every year growing up, which got me into real estate because it was like, oh, like this, we're finding a new place to live every 8-9 months. Like this is really interesting. And then the other kind of cut to that was my mom was a teacher. So I was relatively plugged into like what was going on in different school districts. And when you're, call it 15 years old, you're in your 15th school district, you're in your 15th town all across the country and internationally. It's like, hey, like no matter where we lived, like there was a really good school district in the area. Everybody knew about it. Everybody talked about it. It was like, that was the place. This is kind of an interesting, like universal human trait and human thing, especially if you've got kids later in life. I've got 2, soon to be 3. So that was kind of the initial seed to it. I went to school, finished up, worked in consulting, and as I started making some cash, I started buying homes with my wife to basically test the thesis. Did that for a couple of years with our own money, where we were just, every time we had cash, we were buying another home. I was managing myself, doing every tour with the prospective tenants, trying to understand to see if we actually were onto something. And then after a couple of years of doing that, I was like, okay, like we've got something here. Like it's time to turn this into a true fund model.
That's amazing. So were you the starter, Sean, of essentially the fund? How many partners do you have in the fund?
Yep, I'm the start of the fund. I've got one partner in the fund, and then we've got a board of advisors of 6, and then a team of 4.
This is amazing. It's amazing. And you investing yourself, do you still own your own personal portfolio as well?
Nope. Everything is basically every free nickel we have is in the fund.
Amazing. Amazing. And why do you guys, and was this still the case when you were investing as well? What is single families? Why not multis? Why not complexes? Tell us why single families.
What I like the most more than anything else is the supply demand dynamics in the zip codes that we're in. That's really what I'm optimizing for and like what we're selected for. The byproduct from that is the only residential asset class available in those towns is single family. They don't let multifamily development happen there. If there was multifamily development, like, yeah, we would be interested in that because we want those supply-demand dynamics. But the only game in town is single family, and I would rather buy single family in a very easy pond to fish in and operate in than multifamily in a more competitive pond.
So it's almost by default.
Yeah.
Yes.
Mm-hmm.
And that's why I just am so infatuated and love real estate and real estate investing, because there's a million different ways that you can be successful in real estate investing. I have people ask me all the time, hey, John, how do I get into it? I'm young. I want to buy my first property. How do I get into it? What should I do? And I'm like, well, I can tell you what I did, but you can talk to 20 other people and they can tell you 20 other ways that they did it, right? So that's just why I love this game and love just how broad it can be, how many different options you have out there. Now, I know you mentioned the exit plan too. What is, say you guys exit, are you just, hey, let's start building this money back up and do it all over again? Or what would that be from there?
It depends on, there's a couple different variables. Like if it happens, we do have some investors who say like, hey, like it would have to be a really ridiculous overpaid number for us to sell. So there's a question of if, there's a question of when, there's a question of how big the portfolio is. So it's hard to answer because there's a lot of kind of different branches on the path. My guess is if we do sell, is that would be it. We want to do this once with feeling. We don't, incentives in the fund world is kind of screwed up where like you're incentivized to basically try to flip your first couple funds as quickly as possible, because then you're on fund 3 and I've got a track record across 3 funds and now I can raise a lot more money and you get paid off asset management fees at a higher clip at that point. So then you can just cash a lot of money each year without needing to worry about returns. That's not really the game we want to play. We want to do this once. We want to do it right. We want to do it with feeling. So I think if we were to sell, it'd be a one and done type setup.
Gotcha.
Hey, Sean, what advice would you offer to beginners who may be wanting to start their own fund?
The biggest advice I can give you is going down a fund path is the worst. It's, the whole thing about like the worst thing to go cheap on is like tires. Like the worst thing in the world to go cheap on is like a fund. So what you need a security specific attorney. They only tend to work at the big firms. You need 2 different accounting firms in place as well. And because you're talking about an SEC regulated instrument, it's an area where you can do something wrong very easily without realizing it. And you absolutely have to have the securities attorney. You have to have a fund admin accounting firm. You have to have a tax prep and audit accounting firm. There's no other way about it. Those are expensive. So like I've had a lot of folks who are like, hey, like how can I get away around doing it? And like that's a pathway to prison. And it's a pathway to losing LP money. But it's the one thing I really, really, really want to emphasize every time someone asks me that, because it's like, this is kind of it's literally like prison or not is the question. And like, you really don't want to screw around with that for your sake and for your LP's sake.
Yeah, but I asked ChatGPT and it drew up these documents for me. So I'm ready to go, baby. I learned it all on YouTube. No,
well
be
said,
careful.
well said.
Do it the right way and invest in yourself. Final questions, JP. Thoughts?
Yeah, no, this is just, I final questions. I think I have 100 more that I could ask.
Okay.
It's super intriguing. It is though. You know what I mean? Like, it's just a whole different world. Now, Sean, let me ask just from your perspective, and I won't try to drag it on either. What is this? Is this all you're doing right now? Is this all you and your wife are doing in terms of your income? Is this your job on a day-to-day basis?
Yep. So my wife, she was my partner in buying the first couple of homes. She's got her full-time job. So this is me right now in the fund. And I'm technically legally not allowed to do anything else. There's provisions in our contracts with LPs. Like I am full-time on the fund. And if I'm not, there's a whole bunch of disclosures and things that we have to do with the investors to let them know that. So I'm full in on the fund.
Gotcha. That's awesome. And how many investors do you say you guys have right now, if you're even allowed to share that?
We have 50 investors as of today.
Amazing.
We had one come in like an hour ago. So
let's go.
50 as of an hour ago.
Hopefully we can bring you a few more. Help spread the word.
Yeah. And you said what city, what states are you in?
Upper Midwest. So we're in Minnesota, Wisconsin, Illinois, Indiana, Michigan, and Michigan. So those 5.
You got us surrounded. We're right in Ohio.
I say, Pete, they're missing.
There's a hole there in Ohio.
What is going on?
Ohio.
Do you know what they call Ohio when it comes to rental properties?
I don't know.
Cash flow Ohio.
Cashflow Ohio.
Cashflow Ohio. I like that. I like that. That's got a ring to it.
Certain parts at least.
Yes.
Yeah.
No,
it definitely help you out in Ohio as well. Hey, Sean, where do folks get a hold of you?
Yeah, so we're at scholasticcapital.com, and then I tweet a lot as well, more so just like stream of conscious than like planned scheduled tweets, but just like stream of conscious to like what we're doing and seeing and working on. So I've met a lot of people on Twitter who just send a DM when we start a conversation. So I'm fairly accessible and reachable there.
That's awesome.
I'm gonna have to give you a follow there. I gotta tune into the thoughts of Sean on Twitter as well here. Excuse me. X now. Sorry about that. No, I have no other final thoughts. It's been an amazing conversation. Thank you for sharing again. Just another niche in the real estate business. And I'm really looking forward to seeing you guys continue to grow, man. So keep doing your thing. This is awesome.
Thank you. I appreciate that.
Final thoughts, Sean?
This has been fun. I'm glad I appreciate the energy. It's been a lot of fun talking with you guys.
Yeah, man. Hey, Sean's out here helping people make money. And that's how it works. The more people you help and the more you can scale, the more successful you will ultimately be. So thank you, Sean O'Dowd. You can find him on scholasticcapital.com, scholasticcapital.com, and also on the X, Sean O'Dowd's Random Thoughts of Real Estate. So love it. Hey, thank you, everybody, for joining in. Thank you for watching and listening to the Dream Huge podcast. Please remember to like, subscribe, and share. And as always, remember the rules. Work hard. Never give up. Wear your hoodie. And dream huge, baby. Let's see the gun, Sean. Dream huge. Yeah, buddy.
Thank you for listening to the Dream Huge podcast. Make sure you subscribe so you don't miss any future episodes. For more inspiring content, follow us on Instagram and Facebook at Dream Huge Realty and on TikTok at Dream Huge Inc. Until next time.